The things I'm about to show you in this video will change the way you look at support and resistance and can actually help you become profitable. Support and resistance levels fundamentally are key areas where whales are buying or selling with limit orders. There is nothing more to it, and don't overcomplicate it. So, advice number 1 would be to not look at support and resistance as levels, but as areas. The market isn't perfect, and once you start trading you see that patterns and setups don't form in the perfect way. The same goes for support and resistance. Those levels might not be perfect, but still be right if they are in the same area. So don't use the line tool on TradingView, instead use the rectangle tool and mark out the areas where buyers and sellers step in. But how do you find them? I personally use the wicks of the candles, especially on lower time frames, to find out where momentum changes in the other direction. Many people don't use wicks but actually the bodies of the candles, but I think wicks are way more accurate because they show how price reacts and where the limit orders actually are, which is the most important thing. The second thing we're going to talk about is actually a mistake that many traders do, and it is to fill their chart with too many key levels and too many support and resistance lines. What you should do is mark out the absolute top and bottom of the range, and also maybe 1 or 2 more levels. Anything more than that is more likely to confuse you rather than help you, and you wouldn't know where to buy and where to sell. Advice number 3 is very important, and it is to zoom out on a bigger time frame when you're trying to find support and resistance levels. I personally zoom out 3 to 4 times on my initial time frame. So let's say I trade on 15 minute, I zoom out to the 1 hour time frame to find key levels. This way you're actually more picky about the levels you choose, and price is more likely to react quickly of those levels, which is great if you trade reversals. Advice number 4, after you've marked out all of your levels, choose the ones where price reacted quickly, or where there are big wicks to the upside or to the downside, because they show where limit orders actually are and where whales actually buy or sell. I would actually try to enter at those key levels and keep my trades very quick. So in summary, look at support and resistance as areas, not as exact levels. Don't view your chart with too many levels to overcomplicate it. Number 3, zoom out on a bigger time frame so you find out which levels are actually important. And piece of advice number 4, enter at levels where price reacts very quickly so you keep your trades short. So that was basically it. See you in the next video.